So I usually give it about 5 minutes just in case. And I don't need the transcripts. This thing's defaulting. It always wants to put the transcripts. Okay, so the recording is going. I did remember that today. Yep. And I'm going to say this to both the two of you and to everybody that's watching the video. This class gets a big attaboy. I've been teaching this class now for almost 5 years. And this is the first class where everybody in the class got the first assignment in on time.
That's pretty bad.
Everybody reach around, put your hand up, turn it, pat yourself on the back. You guys done good, okay? The whole class, everybody, even the ones on video. Way to go. Question for the two of you, obviously, since the others can't. What'd you guys think? I saw that all the homework's in. I will start grading them tomorrow. But what'd you guys think?
Went pretty good.
Did you go okay?
Went pretty good, yeah. I thought so.
Okay.
I didn't remember all the little Excel technical stuff of moving stuff around, but I got all the formulas in, I think.
Okay.
Same.
Sounds good. Like I said, I'll start grading them tomorrow. I get home about 4:30 tomorrow, so I'll start grading them tomorrow evening. Hopefully, I'll get them all graded, and so you guys can see your grades, tomorrow evening. At the latest, it'll be Thursday evening.
Okay.
That's one of the things I pride myself on. Is when I teach. I know, because when I was a student, I hated it when I turned a paper in and then I didn't get the results of that paper, until the class is half over, and I've already turned in 2 more papers. Well, if you got the first one back to me in time and I made some mistakes on it, that would have let me know I needed to adjust things on the next 2 papers that I've already turned in. So that said, I try to make sure. If you guys have it now in this class, you don't write any papers, but if you have me for other classes, you may have to write some papers. And I try to, a lot of times when it's papers, even as soon as I get them in, I'll go ahead and start grading those and get them back to you. I don't necessarily wait until the due date for the papers to grade them. I'll go ahead and start grading them and getting them back to you. In this class, though, I will wait until the due date for all of the papers. That way, because when I send it back to you, I'm not just going to tell you if you get something wrong. I'm not just going to tell you you got it wrong. I'm going to copy and paste from how I did it, so that you guys see how I got the answers that I got. Basically, show you the work. Every one of these quizzes and homework assignments that you guys are going to do. He must have just cut his camera. Just slid the little thing over the camera. But everything that you guys are going to do in this class, I sat down, I went to the back of the book, and I just kind of, not randomly, but I kind of went through and said, okay, this problem covers what we discussed, and this problem covers what we discussed, and I literally pulled them out, put them in the Excel spreadsheets, and I worked the problems myself. And then I walked away from it, and I came back to it about 10 days later, and I worked them again. And then I bounced them, I checked to make sure that I got the same answer twice. So that way I can make sure when I'm grading them, I'm grading them right. But anyway, so I will tell you guys up front. And again, this is obviously, I'm talking to David and Jacob, but the reality is I'm talking to everybody. But I'll tell you guys up front, of the 8 classes that we're going to have, this is the one that I like the least. Because this is the one where we have to talk about debits and credits and how all of that works. And the reality is, I have to do it. It's an accounting class. It's a basic principles accounting class. So I have to give you guys that understanding, or then I'm not doing justice to you. Okay. But this week is the only time that we will deal with credits and debits in this class. Because we quickly move beyond that and get into doing other formulas and other processes, which are far more important to us as managers. This week is Accounting 101, and it's a lot of it is what I'm going to be doing is showing you the difference between how financial accounting works and how managerial accounting works. Because financial accounting looks at everything backwards, literally. 180 degrees from the way most of us in the world look at it. Like here. Normally I've already taken my wallet out of my pocket and put it up in the other room. But it says debit. Okay? It's called a debit card. And the reason it's called a debit card is because it's attached to what your bank calls a debit account. Now, here's a question that I have for you. Jacob, if
Yes.
you put money into the bank, is that a debit or is that a credit?
That's a credit, correct?
You and I think on exactly the same. I've got money sitting there, so I've got credit in that account that I can draw from. Okay? But the bank, because they have received your money and they're holding it, they call it a debit account because you can debit money out of it at any time. That's why they call it a debit card. So you're going to debit money out of that account, and when you do, what happens is they debit it out of the account, and they go over to their general ledger and they put a credit into another account that balances. Okay? Because when you start talking about debits and credit, now I think like you do. If I got money in the bank, I got credit sitting there. Okay? But this card is called a credit card. You know why it's called a credit card? Because you are buying stuff on credit. And when you use this card, the bank is gonna debit money out of their cash on hand and pay for whatever it is that you're buying. But in order to balance that, they're gonna put another entry into a credit account that's attached to your name. So to them, a credit card account is money that you owe them. It's a credit that they have. They can when they do their books and their balance sheets, they can list that as an asset because you owe it to them.
So you have to think of it like from the bank's perspective, not from yours.
Right. That's the reason I said so that's the difference between financial accounting and managerial accounting. Make sense?
I think so.
It doesn't make any sense to me. I'm glad it does you. Banks, just know this. When you're thinking about the difference between financial accounting and managerial accounting, or you're thinking about your money versus the bank's money, they look at everything 180 degrees out from the way we look at it.
Okay.
Okay? So, that said, let me see if I can make this technology work again. It worked for me real good last week, so let me see if I can make it work this week. Okay. So I am going to start sharing. I'm going to share this. Okay, so now you should see my slide with the little slides on the side, right?
Yeah.
Now I'm going to go to, now you just see the big slide, right?
Yeah, I got your screen is up on top, and then I have the big slide, yes.
Yeah, so you see me in
we're good.
File.
Yeah,
You see
and then I just see your
in full screen, or in the full section there. That's where I was
Yes,
going. Oh, wait a minute, what did I do? I know what I did. I hit the wrong button. There we go. Now you're seeing the full slide, right? Okay.
Yes, I am.
So it's still working for me. I just hit the wrong button a minute ago. All right. So our first learning objectives today, and remember that corresponds with the little green block in the book. Question: did you guys get a chance to read through the chapter?
Yep, chapter 1 and
yes.
chapter 2.
Okay. Did it make any sense to you?
Sure.
Yeah, I guess so.
Dave's like, yeah, sure. No. But hopefully, having read through the chapter, now when we go through it, it'll make more sense to you guys as I'm talking about it on the slides. Whereas last week, you haven't read through the chapter yet, the information I was giving you. So hopefully, it'll just make it work a little easier for you. Okay. So our learning objective is going to be to distinguish between job order costing and process costing. Okay. Now, costing means how do we apply the costs for doing whatever to that customer. Okay. It'll make a little more sense in half a second. Okay, wait a minute. Why is this? There. So cost accounting systems, okay? In cost accounting systems or costing, okay, we're gathering information to determine the product or the production cost per unit, okay? Again, I go back to how does this, so as managers, we have to know what our product cost per unit is to know how we adjust, okay? If we know that it costs me, you know, $20,000 to do this run of material, well, did I get good quality on that run? Well, the only way I can know if I got a good quality on that run is to then do the calculations to figure out what it costs me per unit. Because if it cost me $20,000 to do the run this time, but the next time it cost me $40,000 to do the run, well, did it cost me $40,000 to do the run and I did the exact same amount? Or did it cost me $40,000 to do the run and I did twice as much? So you got to be able to figure out, again, think back to that balance sheet that we talked about in the first class last week. You got your revenues at the top, you got your bottom line at the bottom, but in the middle, there's going to be calculations in there. And as managers, we don't have to know how to do the calculations. That's what we pay them people behind the curtain for, okay? We don't have to know how to do the calculation, but we have to know how the people who did the calculations came about getting the numbers they did, all right? And it helps us, you know, it helps us in setting the price so that we earn the profit that we want to earn. And that, you know, cost of goods sold, we talked about that a little bit last week in a couple of those charts that we did, okay? Compute the cost of our inventory, because remember, if we've got stuff in inventory, we can't count it in our cost of goods sold, okay? So that's why we've got an income statement and a balance sheet. That balance sheet's going to help us with our inventory, okay? But then what we have to do is we have to figure out, are we going to assign costs by a job or by a process? Okay, and that's the big thing for this chapter. Let's see. Hey, I got those buttons working right too. So what we're looking at is job order costing versus process costing. Okay, job order costing. Companies that do this, they manufacture stuff in batches of unique type products, okay? And by that, you know, an accounting firm, if an accounting firm is taking care of customers, they're not charging, they may be charging every customer the same amount, you know, to do different jobs. But like, I don't know if you guys have you're probably not old enough to even have figured out taxes yet, okay? But like when I go to do taxes, okay, I have my W-2 form, and for every W-2 I turn in, there's a fee. And then if I have like in my case, because I work for I'm retired, so I get a 1099-R. No, that 1099-R is not, I don't remember what the number of the form, but every one of those different forms that I turn in to the accountant, he charges me so much money for each one of those. Well, if I go turn them in, I've got a certain number of forms that I turn in. But if Jacob goes and turns them in, he's probably not going to be turning in near as many forms, okay? So we can break it down and we can, by the job. So I'm one job, Jacob, you would be another job, David, you would be another job at an accounting firm. And each one of us, they're going to be able to calculate the cost to do our job specifically based on the work that they do for us. So that's job, that's what, so, building contractors, okay? I may go out and I may order, 3 truckloads of plywood because I've got 3 houses on the same block that I'm building, okay? But each house is a little different. So if I order 3 truckloads of plywood, I may get a full truckload delivered to this house, and I may get a truckload and a half delivered to this house, and I may get a half a truckload delivered to the third house. because it's a smaller house, or, you know, maybe this one's just huge, or for whatever reason. But I can apply the amount, because I'm building a house, I know exactly how much plywood I put into building that house. So I can apply that plywood to that house, okay? Healthcare providers, doctors, okay? You go in and see the doctor, they give an itemized bill. Every one of those things that the doctor tells the nurse to do to you, he's gonna bill you for it, okay? Yeah, okay? So that you accumulate cost in a batch. You know, this batch of cost goes to this guy. This batch of cost goes to this guy. Okay. Another good example. The first thing I always think of when I think of a job costing is there's a couple of there. I didn't put them on these slides when I made this. I don't know why. But the first thing that comes to my mind is a lawyer. Okay. Have you ever heard the phrase billable hours when they're talking about a lawyer? Okay. That means how many hours has he worked on your account that he can bill you for? Because he may be working on 15 different accounts. So he has to keep track of how many hours he worked on your account for billable hours to your account. So he's worked, 20 hours in that day. He may have put 10 hours on one account and 4 hours on another account and, 6 hours on another account. So they've got to keep track of all that for billable hours. Another one that comes to my mind when I think of job order costing is like people that build yachts. Okay. Now, if you're talking about somebody who's building a Johnson, a bass boat, and they build hundreds of bass boats that come off an assembly line, now those guys may be, they may do their billing in a process cost. Okay. But if you're building a yacht, the people that are buying that yacht, they want items that are unique to them, not uniquely, but unique to them. And so let's say that we're building a yacht for Dr. Bittner, okay? Dr. Bittner may want gold toilets in all of his latrines, where Jeff Campa may want just the old-fashioned porcelain ones in his, okay? Well, I'm not going to charge Jeff for porcelain or for gold toilets, right? If this yacht's got 15 bathrooms in it and I put 15 golden toilets in it, Dr. Bittner is going to get charged for 15 golden toilets. Make sense? Okay.
Yeah.
Whereas process costs are a little different. Okay. Process costs is where you do a lot of the same thing over and over and over and over and over again, and you end up, you have materials that's hard to track and kind of like the yacht, okay? It's very easy to track 15 golden toilets to Dr. Bittner's yacht, okay? Whereas if you're doing, a bass boat or just an old rowboat, okay, the aluminum that goes into making that aluminum rowboat, a little harder to keep track of saying that, this aluminum went in this boat and this aluminum went in that boat, okay? So another example of a process cost company would be like a company that makes plywood. Very difficult for them to be able to keep track of the wood that goes into each individual sheet of plywood, right? Because they've got a tree. Have you guys ever watched plywood being made?
No.
If you have a minute, one of these days you should go to YouTube and Google making plywood, okay? Literally, they put this tree on a spindle, and it spins. And as it spins, there's blades that cut it, and it cuts it into however thick the layers are in that plywood. Because you guys have seen the edge of plywood, you see it. It's layers of it, right? So it basically peels it like an onion. Okay. What's cool is when it's done, you get this toothpick looking thing that used to be a tree left in that spindle holder. Okay, they take a tree that was this big around, and when they take it off the spindle, it's about that big around. That's how far down they've peeled that tree. But as it's peeling, it's going off, it's getting cut into the right size section. It's going down the assembly line. It gets sprayed with glue. It goes down the assembly line and gets stacked until you get the right number of stacks on a piece, and that piece is then pressed, and then it's shot off to an oven to be dried. Okay, well, this tree that they're peeling some trees are this big around and some trees are this big around. You never know for sure how many layers of wood you're going to get off of that tree, right? So it's hard to track. This tree went to those pieces of wood and this tree went to those pieces of plywood. So they do it in a process cost. They figure out what it costs to make a sheet of plywood, but when they're making it, they have to apply a whole bunch of different calculations to it for indirect materials and indirect accounting. Okay, and yeah, I told you this is the most boring class that we're going to have, so I apologize up front. Okay, so you guys kind of got the difference there between what is a job order cost. It basically, the way you look at it is, okay, I'm doing this job. Can I apply the expense form of the materials to a specific job? Building a yacht, yes. Making plywood, nah, it's gonna be kind of hard to track the expenses to go into an individual sheet of plywood. Okay? And that's it for learning objective 1. Yay! Okay. So now we're going to start recording materials and labor for a job order cost. Okay. So again, think back to a job. We're figuring costs for a specific job right now. Okay. So the different costs that we have. You guys said you can see my cursor when I move it, right? Okay.
Yeah.
So we've got direct materials. Now, you see these charts? These are called T charts. Okay. Or T journals. Here's where we start talking we get the understanding of debits and credits. Okay, if it's on the left side of the T chart, it's a credit. If it's on the right side, it's a debit, meaning on the left side something's coming in, on the right side something's going out. Make sense? Easy enough? I much prefer using these type of examples as to and I'm going to show you guys journal entries, but it's just a cursory. I'm going to show it to you, and we're going to keep right on moving. Okay. So our in-process inventory. So this is a job that's being done. Costs that are incurred for job 1. Well, we've got direct materials, we've got direct labor, and we've got manufacturing overhead. So those are going to go into the work in progress. Now, once that work is done, it's going to go to finished goods. Easy enough, right? So it's going to go into here. So whatever our cost totaled here is going to come out of here. So these have to balance, by the way, guys. So our work in progress, this is the amount of stuff we put into work. This is the amount of stuff we take out of work. Now, if it's still being worked, you're going to have stuff coming out, and then you're going to have an ending balance on this side, so that this stuff, whatever left, whatever's still here, has to match what we brought in. Okay, so let's say we're doing this job, we completely finished this job, so now it moves over to finished goods inventory. So it's sitting in a warehouse somewhere. Okay, so it's sitting there, it's sitting there, it's sitting there. And we sold it, so it's gonna come. I didn't move it to here. I should have put this arrow on this side. Okay, so this arrow is coming from this side, so it comes into our finished goods inventory. We're going to take it out of our finished inventory, and we're going to put it down here to cost of goods sold. Okay, and then cost of goods sold is going to be matched on this side. I don't take it that far in this example. But in a true costing format, cost of goods sold is going to come out of here, and it would go over to an account that would say accounts payable. Okay, because there's cost associated to what it cost us to make this. So once we know the cost of our goods sold, we have to pay for what it cost us to sell that, to make and sell that stuff. Okay, so just understand these have to balance. These are ledger, okay? And we're going to look at a general ledger here in a minute. That may be the only time in your life you ever look at a general ledger, unless you decide to become accountant. Okay? So here's a general ledger entry. Okay, let's back up one. If this was a general ledger for work in progress, this would be a general ledger for finished goods inventory. This would be a general ledger. So work in progress, let's look at it. Okay, well, material inventory. If we move stuff into our, again, this is the part, it's backwards. Okay, so bear with me. If we move stuff into our material inventory, it becomes a debit. So we've got it sitting there, and it's available for people to draw from. Kind of think of your debit card. The bank's looking at that. Well, at this point, we're looking at that. So this is materials purchased. So we purchased materials, and we added it to our inventory. Well, if we add something to our inventory, if we purchased materials, then the credit, so we've got another account setting over here, which is our accounts payable. Okay, well, accounts payable is to balance out, accounts payable goes here. Now, if this was the accounts payable ledger, the accounts payable would then receive that on the left side as a debit. Does that make sense? Think back here. Let's back this up one. Okay. So, and I should have put a better example in here, and I apologize. So, think of this as this is materials received. Okay. So this is merchandise purchase. What purchasing material? Or, yeah, purchasing materials. So we received purchasing materials. Okay, well, if we received it, the balance on the other side is going to be accounts payable. Well, if it's accounts payable, just kind of like this moved from here to finished inventory. So if this is the account, guys, I hate this. Okay, just understand, because you're going to have a little bit of a homework assignment like this. Okay, material inventory. If you purchased it, it goes on your debit side. Well, if you have it sitting here on your debit side, then something has to balance it. So here's the way to look at it. I got a truck full of steel that's coming to my machine shop, and I bought $50,000 worth of steel coming to my machine shop. So my material inventory went up by $50,000. Well, if this went up by $50,000, my accounts payable went down by $50,000. Does that make sense?
Yeah.
Okay. It understand the accounts payable account actually went up by $50,000, but it balances out here. Okay. We're saying we have to put the accounts payable off on another account somewhere. So it's going to come out of here in accounts payable, and it's going to go over to another account. Okay. So now we're going to move from purchasing materials to using materials. Okay. So direct materials. Some of the material we use, we can account directly to a job. And let's take, for instance, let's say we're in a furniture factory and we're making tables. Okay. Well, if we're going to make tables, there's a certain amount of wood that we have to use in order to make that table, right? And that's usually going to, if you're going to make that table, have you guys done any woodworking?
Oh yeah. Plenty.
A little bit, yeah.
Okay. So when you go to make something, you usually have a materials list, right?
Yeah.
So I need, if I'm making tables, I need, 6, because this table's going to have 6 legs. So I need 6 4x4s, and I need 16 1x6s and whatever. So you got a list of materials. Well, that's direct materials. It's going to go directly into making that table. Okay. But you're also going to have some manufacturing overhead, which is indirect materials. And the reason we call them indirect materials is because when you buy it, it's hard to say when I bought this specifically and I took it out of my warehouse, my materials inventory warehouse, and took it over to my production warehouse. it's hard to say exactly how I'm charging that out. It's indirect cost. Good example of that would be the finish shop. A company that makes tables all day, every day, okay, they can charge the material, the wood for the table directly to the table making. But when they go to make that table look like a walnut table and they spray it with walnut stain and finish, chances are the walnut that we bought, we're going to buy in a 5-gallon bucket or a 30-gallon drum, depending on how much we're making, right? Well, if I'm buying a 5-gallon bucket of stain, that 5-gallon bucket of stain may stain 120 tables. So the amount of stain that went on that one table is kind of hard to calculate, right? So there's a formula that we will learn when we get into overhead, manufacturing overhead, and figuring out indirect material costs, okay, that we're going to go through a formula and figure out how much indirect materials is going to get charged to this job. But just know that materials in use, we've got direct materials we charge to the job, we've got indirect materials we charge to the job. Well, if this is being charged to the job, then it has to have a balance, something on the right-hand side of the sheet, right? Okay, now here's where I can go back to this chart. So this is my raw material inventory. So we just moved direct materials and we moved manufacturing or indirect materials into the job work in progress. Okay. Well, if we move this in, if you look at this as a T-chart as well, we move materials into here. Well, how do we balance that? Well, if I'm going to take materials and move it into here, then this T-chart, the material inventory. So let's say, and I'm just going to throw some numbers out here. Let's say that I moved, $2,000 worth of direct material, and I calculated in my manufacturing overhead, indirect materials is another $700. Okay, so the value is 2,000 plus 7,000 plus 700. So my material inventory account is going to get $2,700 to a credit back to them. Does that make sense? I moved $2,700 worth of material into my work in progress. Well, where did I move it from? I moved it from the material inventory count. So material inventory has to get credit for it. Okay? Clear as Mississippi mud, right?
I think so.
Okay. So how did we move stuff to the work in progress? Most companies have some form of a requisition sheet, okay? Because the warehouse has got all this stuff stored. My machine shop, that $50,000 worth of metal came in. Well, that $50,000 worth of metal was probably 200 different pieces of metal, okay? Well, I'm doing the job I'm doing, I only need 60 of those 200 pieces. So I'm going to come in and I'm going to give them an item number and an item description, and I'm going to tell them 60. Well, how much does one of those cost me? So what's my total amount? Okay, just a requisition form. Pretty straightforward. So let's kind of track this process. Okay. So we've got materials purchased. So right now, my material inventory is empty. There's nothing there, right? So I purchased materials. I have direct materials in my inventory. I'm taking those direct materials and I'm moving them. Yeah, use the cursor, David. I'm moving. They move to the right side because I'm moving them out and I'm moving them to the work in progress. Okay. So I've got work in progress going. But I've also got some indirect materials that I purchased. Okay. The 5-gallon bucket of stain, or maybe a 30-gallon drum of glue, or again, I'm going back to the woodworking shop. I jump back and forth a lot. When I'm buying nails or staples that go into putting this table together, okay? And when I buy nails or staples, I'm buying them by the pound, and I may buy 700 pounds. Who knows? Depends on but I've got indirect materials, okay? Well, those indirect materials, we don't necessarily put into the work in progress. We move it down here to what a sheet that's called manufacturing overhead, because we have to figure out the overhead, the cost of our overhead to be able to apply as well. So our indirect materials is going to come down here to our manufacturing overhead costs. A job cost record. This is just a record that's going to show the different materials. So remember that requisition sheet we looked at just a minute ago? That's one requisition. Well, this job cost, so that we can keep track of the cost of that job, this is the different way. So we've got direct materials. We may have put direct materials into this one on a regular basis. Okay. Maybe this job took us 6 days to finish. So we've got 2, 4, 6 days worth of entries here. And then we also track the amount of labor that's going to go into that job. And we're going to track our overhead cost applied. And just understand we're going to apply cost, and we'll figure that. We will calculate how to figure that out here in a little bit, okay? But it's going to get applied. And the reason why this is so critical is because a lot of times people think, well, I use these materials and I had this much labor. This is what it cost me. Let's say it cost me, $10 to make that table. I'm making an end table. It cost me $10 in materials to make it, okay? And I want to sell it, I want a 20% profit, so I'm going to sell it for 12 bucks. Well, if I had $8 worth of overhead cost applied to that as well, now my $10 became $18, and if I'm only selling it for 12, I'm losing money. So this is where in management, our overhead costs, if we don't apply these overhead costs, we can really catch ourselves up and cause us to lose money real quick. Okay, so just like those other charts where we were talking about materials, we also have manufacturing wages. Okay, if I've paid, Jacob, if I pay you $10 an hour and you work 10 hours, I owe you $100, right? Well, for this job, I'm going to debit $100 to the manufacturing wages, but my wage payable, kind of like my accounts payable, has to absorb that cost because you want paid, right?
Yeah.
So that's going to go to this side. Timesheet. You guys understand how timesheets work, right? Don't need to go real in depth to it. Started at 8 o'clock, got off at 5 o'clock, worked 7 hours. You get $11.25 an hour. You made $78.75 for the day. Most of it's done electronically these days. It's not done with time cards like this. But even when it's done electronically, this is still the process. It's just done on the computer or on your phone or some app instead of an actual piece of paper. Have you guys ever had to punch a time card?
Yep.
I haven't, no.
Okay, well, this is basically punching a time card, because this is a one-day job, but if you punch a time card for a week, all it does is, instead of being for one day, it adds up your totals for the week. Same process. Okay, so let's get back to that account we were talking about a while ago, okay? So manufacturing wages. So we have wages that are incurred. We manufactured something. Some of it's direct labor. We can apply directly to the work we're doing, i.e. the table we're making. So let's stay with the table scenario, okay? But we also have indirect labor. Well, how do you think we would come up with some indirect labor?
Person who cut the boards in the first place.
Well, the person who cut the boards in the first, you talking about as it came into the material inventory?
Yeah, that would probably be direct
That
material.
would probably be another company, because I bought the wood already cut.
Yeah.
Okay.
Maybe the fellow who sweeps the floor.
Say again?
Maybe the fellow who sweeps the floor.
There you go. The janitorial service. Or if I'm making tables, I'm probably cutting a lot of wood, so maybe I've got a maintenance guy who keeps all my saws working correctly. Okay? So that's indirect labor. Now, mind you, you also have the girl up front who's doing the payroll, but she's not involved in this process. She ultimately has to get paid, but that goes back to that term that we used last week, GSA. Or SGA. There we go. I knew I was saying it wrong. SGA, sales and general administrative costs. Okay, that doesn't count in the manufacturing process. We're only accounting for the stuff that's involved in the manufacturing process. The guy who's sweeping the floor and cleaning up, that's part of the manufacturing process because we have to have a clean, safe work environment. The guy who's fixing the saws, well, I can't make the tables if I don't have saws to cut the wood. Make sense? Okay. Now, some companies, and I told you every company's a little different. Some companies would take the janitorial and wrap it up in their SG&A. I would not. I would take that guy who's cleaning the shop floor and making sure all the wood scraps are up and the blower system's working to suck all the dust and everything out. I would charge him against my manufacturing process, because if that doesn't happen, then the guys that are running the saws and putting the tables together, they have to stop and do it themselves. Does that make sense?
Mhm.
So, but every company does that a little different. So we've got direct labor that's coming over here, and we've got indirect labor. And again, anytime you see indirect, this is a key term for you. Anytime you see indirect, whether it's indirect labor, indirect material, it always goes to the manufacturing overhead slide. Okay? So if you see in our work in progress, we've got direct material and direct labor that's still being added to this work in progress. I'm skipping that one, guys. Sorry. I'm just not into it tonight. Okay, so assigning manufacturing overhead to a job. Actual overhead costs are debits to the manufacturing overhead account. Long way of saying, if it's part of the manufacturing process, it goes to the manufacturing overhead account. If it's part of the manufacturing process and we can't charge it to the specific job, like the maintenance guy or the janitorial service, okay? Manufacturing overhead, the cost to heat or cool the building, the cost for lights and electricity in the building, those are manufacturing overhead costs. Okay. Overhead costs, it's costs that are essential to the production. Okay. We must be able to assign it to the specific job to determine the full cost, and I'll explain that a little bit here in a minute. But we use what's called a predetermined overhead rate. And what that does is it takes all of this determined cost and we calculate a rate that we're going to apply to the job. Okay, and in fact, I think right now is where we're going to stop, because we're going to kind of take a break from those charts and everything we were doing, and we're going to start getting into how we determine the manufacturing overhead. Okay, so let's go ahead. I've got 6:48. Let's come back at 7 o'clock and start again. Okay, get you a cup of coffee, something to get you, drink a Mountain Dew, something, because we're going to go quick over this next section, but there's a lot involved in it. Okay. All right, guys. Back in a few. Welcome back, Jacob.
Thank you.
David, are you back with us?
Yes.
Okay. So I stopped sharing just for a minute. I need to make sure, is it back up? Are you guys seeing the slides again?
Yep.
Yeah.
Okay. So I stopped sharing because I needed to flip through the slides real quick. If you guys look at the very top right of this slide, you see where it's got PG 58?
Mm-hmm.
Okay. This slide comes directly from page 58 in the book. Speaking of which, did you guys get your books? Jacob, you already had yours,
Yes.
right?
No, I didn't have mine. Mine came in the next day from class.
Okay.
So last Wednesday.
And David, you got yours?
Yep.
Okay. And for all of you that are watching, obviously you guys all managed to get it because you either you have got your book or you were able to work with somebody who does have one because you all got your assignments in. Okay, so we have moved to page 58 in this chapter if you want to follow along. Okay, so the predetermined manufacturing overhead rate. There's a whole lot of fancy stuff that I'm going to throw at you here in the next 5 minutes or so, but let me distill it down and give it to you in a real quick phrase. Okay, you need to know the total costs of your overhead for a given period. Usually, we calculate it for a year. I say usually because some companies will do it quarterly because their rates change enough from one quarter to another that they will actually calculate it quarterly. Most companies, however, will calculate it for a year. Now, what you notice it says total estimated manufacturing overhead costs. That's key. Eventually, you're going to have to go back and find out what your actual costs were and compare them against what you estimated to figure out whether you added enough overhead cost in or maybe you added too much overhead cost in. So this is something that gets, for most companies anyway, it's reevaluated on a yearly basis, okay? But again, for my machine shop, what I did was I had two guys that were material handlers, forklift guys, and they moved my stuff all over the place. So if I'm calculating my manufacturing overhead for a year, what I had to do was take their labor. What am I paying them times 40 hours a week times 52 weeks a year? I also had 3 maintenance guys whose job it was just to keep my machines running. I had one guy that was always daytime, I had one guy that was always nighttime, and I had another guy that was a floater. He could move back and forth depending on, sometimes we had machines where we would shut machines down to do regular scheduled maintenance on machines. And that was usually his job. He was the one that would come in, we'd shut a machine down for 3 days, and he'd spend 3 days tearing this machine apart and putting it back together and making it so it could run for another 100 years, okay? So I had to take those 3 maintenance guys and calculate their payroll for a year. And then I had to figure out what's my average utilities cost for my gas and my electric and all of that, put all of that in. And that's how I came up with that total estimated manufacturing overhead cost. All of those things that were part of my pile that was overhead cost, I had to estimate what it was going to be for the year, okay? Then I had to take and estimate my total quantity of whatever it is I'm manufacturing, okay? So if I'm manufacturing drill bits that go down into the ground to drill oil, or if I'm manufacturing tables, or if I'm manufacturing brushes, whatever it is that I'm actually manufacturing, I have to figure out how many of those am I going to manufacture during that same time period. Then it's a simple calculation. You divide the cost by the number of times you're going to do that operation to get you your overhead, your manufacturing overhead rate. Okay. Now, For this week's lesson, we're going to focus on what's called primary cost drivers. Okay. Excuse me. I'm jumping ahead 2 lessons. It's not the total number. It's not the total number of drill bits I made or brushes I made or tables I made. It's the total. We're going to have what's called a primary cost driver. So some people will calculate their they take their, slow down, David. Some people will take that total estimated manufacturing overhead cost. That I got that right the first time. It's what are we dividing it by? Okay. Well, we have to have an allocation base. Are we going to divide it by direct labor hours, direct labor cost, machine hours? These are just things that are part of the manufacturing process. Okay. So in this case, let's say we're going to divide by the labor hours. So we take the total estimated manufacturing overhead, and then we calculate how many labor hours do we think we're going to have in our production line to do that calculation. And anytime you see the word rate, you're going to have a percentage. Okay? You're going to have a percentage. Anytime you see the word rate, when you're talking manufacturing overhead, it's a percentage. Okay, so that same slide just put into a little bit different format. Our manufacturing overhead cost equals our predetermined manufacturing overhead rate. Then now we get into times how many times did we do it. Okay, so once we have our rate from back here, then we say, okay, our manufacturing overhead cost is that predetermined rate times how many brushes did I make, or how many tables did I make, how many drill bits did we make. I'm skipping that. That's what I needed you guys to get from that section, okay? We're going to account for finished goods. So now we're back to these T-charts, this accounting or this journal stuff that I hate. So, but we talked about direct materials a while ago, right? How it moved from the material inventory into the work in progress chart. We talked about direct labor, okay? The direct labor is in our, now manufacturing overhead, remember that was down here in the bottom chart, right? Well, once we figure out what our actual manufacturing overhead cost is, it comes from this chart down here back up to the work in progress chart. The reason it didn't come into here first is we have to figure out what our calculation rate is, multiply it times how much we're making to get our actual overhead cost. So so when you add all of this stuff up, the balance on the other side is cost of goods manufactured. Okay, well, once it's done being manufactured, it's going to move into your finished goods inventory. Once it's in the finished goods inventory and sold, meaning we take it out of finished goods inventory. So you see how it changes names though. Cost of goods manufactured, cost of goods sold. The difference being you may have manufactured more than you sold. And if you did, the difference is going to stay in your finished goods inventory. Make sense? Okay. This is just a chart that says, remember I told you you have to, most companies will recalculate their manufacturing overhead rate on an annual basis because you need to know, are you applying the right amount or the wrong amount? Okay, so if you take your actual cost and you look at what you applied or your predetermined rate, if your actual cost is greater, your overhead was undercalculated, meaning you didn't add enough to the product, so you didn't make as much money as you thought you were going to make because your actual costs were too high. Well, if you applied more, if your applied rate was higher than your actual rate, okay, if your applied rate is greater than your overhead allocation was too high, meaning you charged too much, and it throws off your calculations because now you've if you had it calculated for a certain amount of profit, now you've actually made more profit, which isn't necessarily a bad thing. If you're going to make a mistake one way or the other, you want to make the mistake on the right side of this chart. Okay? You want to apply too much up front so that your bottom line looks better. Now, this gets tricky because if you apply too much, too often, then you can throw your whole calculations out of whack as far as your percentages, and the boss thinks he's making a whole lot more money and he makes decisions based on what he's seen and doesn't realize that your overhead manufacturing calculations are wrong. So you want this to be as close to zero as possible, the difference between actual cost and estimated cost. Okay? All right, so let's take all of that stuff we've talked about now for the last hour, and let's start to put it into some actual calculations. So a service company, whatever kind of service company it is, it could be a lawn care service, it could be a sprinkler care service or sprinkler service, just a service company, okay? They have no inventory, okay? And the manager needs to know the job cost to set price, okay? So we're just going to throw some numbers in here for ease of calculations right now. So if our job cost, for job X, if it cost us $1,000, and the owner or the manager, the boss wants to make a 40% profit, a standard 40% markup. You guys see how that worked? Okay, so it's this times 40% or times 0.4 if you're doing it on a calculator or if you're doing it in Excel. So it would be this number times 0.4 gives you this. You add the two together. So here's where we're talking, okay? The cost of the job. Let's say the cost of the job, if you've estimated that it's $1,000, okay, because you've figured out what your direct labor is going to be, you figured out what your direct materials is going to be, you have your manufacturing overhead involved, or in this case, the service company doesn't have a lot of manufacturing, but you got your overhead involved, okay? But if you overestimated your overhead and you said it was $1,000, but really maybe you overestimated by $50, and your job cost was really only $950 instead of $1,000. You see how it can throw your calculations off? Okay, so assigning labor cost to a service job. Okay, hourly rate of the employee. Well, if you know what the employee's annual salary is, and you divide that by 2,000 per year, if you only give them 2 weeks of leave, it would be $2,080. Whoever was making this chart, because this is one that I used from the book. I didn't put the page number up there, but this is one I used from the book. Whoever was making this chart must have been in Europe or something, because this guy gets a whole month of leave. But hourly rate, if you know how much you're going to pay the guy for a year and you divide it by the 2,000, we'll just stay with the 2,000 since that's the example the book uses. You divide it by the 2,000 hours per year, that'll tell you how much you're going to pay the person per hour. Make sense? Pretty simple. Okay, so here's a good example, and the reason I use this one. Okay, this is exercise 3 in the back of the chapter, by the way. When you see this up here, so you can go to the back of the chapter. It should be like S-3, or yeah, I think it's S-3. So this is this top piece right here is the same chart we just looked at. Okay, so let's plug some numbers in. All right, now this company pays all of its employees. Different people are getting paid different rates. Okay, but overall they're going to pay all of their employees $2,150,000 a year. That's their payroll. That's their budgeted payroll for the year. And remember, we said we had to pick a driver. Okay, in this case, they know it's 14. They're calculating that they're going to do 14,000 hours for that year. Well, if we divide this, the total dollars it's going to cost us, by the number of hours that our employees are working, we come up with $153.57 per hour. Now, I seriously doubt that I'm paying anybody $153.57 per hour, but that may be what I'm charging my customer. That's my billable rate to my customer. Does that make sense?
Yep.
Okay. Okay, so exercise 3 continued. In fact, let's pull the book out. Let's just kind of walk through this as from the book as we go along. No, that's not exercise 3 there. Maybe it's exercise 3 earlier in the chapter somewhere. Give me half a second. Or maybe I put exercise 3 up there incorrectly. Okay, well, never mind. Guess I probably should have looked at that before. Let's just continue on. Okay, so back here, we were looking at a simple job. Okay, as we get to here, so we've calculated for exercise 3, we've calculated what our labor rate's going to be. This is hourly direct labor costs. Okay. And we're going to calculate our predetermined allocation rate. Okay. So indirect expenses. Well, our indirect expenses for this exercise is our office rent, our support staff. Now this is a service company. Okay. So in this case, they've decided to put the support staff. That's the maintenance guy and the utility, or the janitorial guy, those guys, okay? Utilities, these are the 3 expenses that they've determined are going to be in their indirect costs. So we have $1,460,000 worth of indirect costs. Okay? Now, expected direct labor hours. So we're still using the same direct labor hours that we used on this one. So if we've got $1,460,000 in costs, and we have the same 14,000 hours, well, we do that division, and we come up with an indirect cost now of $104.29. So we have our direct labor costs plus our predetermined allocation rate gives us our cost per hour. So if we know we have $153.57 per hour that it cost us in labor, and we know our allocation rate is $104 per hour, then we know it's $257.86 that we have in costs. All right, everybody still with me? David, you still with me?
Sort of.
Okay. So we're going to take this. This is our service cost per hour. So we know it's labor is $153. We know our indirect cost is $104. There's change there. $257.86 per hour. Okay. And we know that we're going to have 260 hours on this job. So we take our cost per hour times the $260 or 260 hours. So our total cost for this job is $67,044. You guys tracking with how I came up with that cost for that job, right?
Yep.
It's a service company. We're not manufacturing anything. So we're not looking at direct materials, direct labor, okay? But it's a service company, so we do have direct labor and we do have some overhead costs, okay? So when we calculate our direct labor and we calculate our overhead costs to get our this is how it calculates out. Okay, so let's say the boss wants to make 55% labor or 55% profit. Okay, that's expensive profit, but that's what he wants to make. Okay, so we take our cost for the job. We already said our cost to do this job is $67,044. Well, we take the cost. Now you could do this in two steps. You could say the cost times 0.55 and get what the markup is, and then add the markup to this. The easier way to do it is just simply take your cost times 1.55. You guys tracking with that math piece, right? Okay.
Yeah.
So you're tracking with that math piece. You take the cost times 1.55 to get your markup. Comes out to 104,918, or we'd probably just on an invoice just round it off and say 104,000. Okay. My guess is if it was me and I was trying to get that much of a markup, I'd just mark that thing off at 100,000. I wouldn't even worry about getting that other 4. Okay, but that's the example and how this one worked out. Okay, so next time we're going to talk about quality costing. We're going to get a little more into the just-in-time, and we're going to get into process costing. Okay, so this time we're just calculating getting the basis on how to understand the journals and how to come up with our indirect cost rate. That's our focus this time, okay? So before we call it a night, I need to stop sharing. I need to close this. I'm going to go into okay. Yeah, I'm letting you guys out of here way early tonight, okay? Just, it's the way this class always seems to work out. Okay, so you guys seeing Canvas?
Yeah.
Yep.
Okay, so I'm going to go into the assignments. I'm going to go into the week 2 assignment. Oh, wait a minute. I knew there was something else. Hang on. We're not done for the night. I knew there was something else. I have an exercise that I did from the book. So let me go down here to Files and in-class exercise. I knew I was forgetting something. Okay, so it wasn't exercise 3, it was exercise 23. Okay, so we're going to walk through. Now I'm going to get my book back out, now that I'm tracking where I'm supposed to be. So I do this because I want to show you guys the process, not only that that you would do on a spreadsheet, but I also want to show you the process of what happens on these story problems. Okay, so if I were in the classroom right now, I'd be calling on different people to read part of it, but I'm just going to read it myself this time. Okay, so Sims Realtors, A real estate consulting firm specializes in advertising companies, advising companies on a potential new plant site. The company uses a job order costing system. There's the first thing we need to listen to. And when you're reading these story problems, that's what you need to do. You need to read through here and say, what's the key part? So let's back up. Sims Realtors, a real estate estimating company, specializes in advising companies on new plant sites. Okay, so what are they? They're a service company, right? They do consulting work. That's the first thing. The company uses a job order costing, so it's job order, so they're going to be able to bill everything to a specific job instead of using a process costing. It's a job order costing. Okay, with a predetermined indirect allocation rate, so we know that we're going to have some indirect costs, computed as a percentage of direct labor cost. Now, in our example, we were using direct labor hours, weren't we? Now it's direct labor costs. So you have to pay attention to what the book tells you is the denominator or the bottom part of your division problem. Okay? At the beginning of 2011, see here's where it says 2011. The new book would have said 2020 and they would have charged you more for the book just because they changed the year. Managing partner Deborah Sims prepared the following budget. Okay, so and this kind of goes back to what we were just doing. There we go. The direct labor hours for her professionals is 14,000 hours. Her direct labor costs comes to $2,150,000. And then she's got her office rent, her support staff, and her salaries. Okay. So what does it tell us we need to do up here first? So go to the requirement. Let's finish reading here. Maynard's Manufacturing is in Sorry, dyslexia is messing with me. Invited several consultants to bid for work. Has invited several consultants to bid for the work. Deborah Sims has estimated that the job will take about 260 hours of work. Okay, so then we look at the requirements. What does the book ask us to do? Compute Sims' direct labor cost rate and direct labor allocation rate. Okay, so now look back up at the slides. Now, I have this set up so that it fills it as I go click, click, click. Okay, so what's the first thing we need to do? Well, we need to know our direct labor hours. The story problem tells us our direct labor hours is 14,000 hours, right? So the next thing we need to know is what is our direct labor cost? The story problem tells us our cost is $2,150,000. Okay, so right now we're just going to plug in stuff at the top of this based on what the story problem gave us. Our indirect costs are the rent, the support staff, the utilities. It gives us our total indirect costs. So requirement number one, our direct labor rate. Well, direct labor rate, remember we looked at that in the slide, is our direct labor cost divided by our direct labor hours. So our cost is $2,150,000. Our direct labor hours is 14,000. So if you divide 2,150,000 by 14,000, you come up with 150,357. That's just what we had on the slide earlier, right? Yep. Okay. Mm-hmm. So the next thing it tells us to do is to calculate our indirect allocation rate. Again, remember in the slides, our total estimated indirect cost, then divided by our direct labor cost, because that's what the story said. It's done as a direct labor cost. Well, what is our total indirect cost? Our total indirect cost is the $1,460,000. Our our direct labor costs is the 2,150,000. Now here's where most people make a mistake on this exercise. They jump up and instead of dividing it by the 2,150,000, they divide it by the 14,000. Okay, so you have to pay attention to what the calculation rate is given in the story problem, because sometimes they will use direct labor costs, sometimes they will use direct labor hours, sometimes they will use a different driver like total machine hours. In this case, this is a service company, so there's really only two drivers, labor cost or labor dollars. Okay, so if we take our 1,460,000 divided by our 2,150,000, we get a rate of 67.9. You guys tracking with how I got to there so far?
Yep.
If you guys were walking through this problem, could you have gotten to this point okay?
Probably.
Yeah.
Okay, because that's requirement number one, okay? So now requirement number two is what? Compute the predetermined cost for Maynard manufacturing job. So Sims Realty is doing a job for Maynard. And now what we have to do is we have to compute the predetermined cost. Well, think back to how we determine the predetermined cost. We have our direct labor, which is the 206, or is the 153.57 times the 260 hours, because the story problem said she's going to estimate 260 hours of labor, right? Gives us $39,923 is our direct labor costs. Our indirect costs. Now this is the new step for you, okay? It's on the slides that we did earlier, but we know that our indirect costs is a function of our direct labor cost, right? So our direct labor cost, hang on. Where did the 39,000? Oh, see, hang on. The direct labor cost, we calculated out what the labor was going to be. So our direct labor cost is $39,928. So we're going to multiply our direct labor cost by the allocation rate. And remember, when you're doing the decimal, you're just going to shift it over. So it's going to be 0.679. You guys tracking with how I got that math problem, right?
Yeah.
Okay. So when we do that, our direct labor cost for this job, because remember up here, this is her total labor costs for every job she expects to do for the year. In this case, this is her predetermined rate. Well, now we have to say, well, what if this is our labor rates, this is our predetermined rate, how much goes just to this job? So we know it's $153.57 per hour times the $260 or 260 hours for this job to give us our cost for this job. So then we have to take that cost times the rate to get our indirect cost of 27,111. You add those two together, our total predicted cost for this job is our labor plus our indirect cost to get $67,039. And if you remember back to the slide, that's the number we had back on the slide. Okay, I didn't mean to do that. I forgot. This does not, I can't scroll up any on this, guys. This literally takes the entire slide. So you got to bear with me a little bit because I got numbers that jump up down the bottom here. Okay, so then our next requirement here is if Sims wants to earn a profit of 55%, what we were talking about earlier, for this job cost, how much should she bid for the job? Well, we have to take our predicted cost, the $67,039. Our desired profit is the 55%, so you would take the 67,039 times 55. This is where I was telling you a while ago, you can make it 3 steps instead of 2. Okay, so this would be the cost of the job. This would be the amount of profit that we want to make at 55%. So you add the two together, and it's 1,000. This is the number we came up again with the slide earlier. And in the slide, I said you just round it up to 104. Everybody tracking with that? So this is those slides that we did a while ago. This is those same slides done in a spreadsheet. Does it help any to see it done in a spreadsheet as opposed to just seeing it on the slides?
Yeah, definitely.
Yes. Yes.
Okay, so that said, let me back out of here, and I'm going to leave it so you guys can see it as I'm backing out. Okay, when you go to do your homework, if you want to be able to look at this slide again, you come into the class, you go to Files, you go to 2-3 in-class exercise. Okay, now this is that same exercise just done up on an Excel spreadsheet as opposed to being done on a PowerPoint slide. But if you guys want to see that as you're going through, just click on this, pull it up. When you first pull it up, it's going to have all the numbers plugged in. If you come down and you hit the little thing that looks like a projector slide, excuse me, a projector screen, it pops up, and then it'll allow you to go click, 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 click through the exercise. Okay? So that was the other piece. Now we're going to go assignments. Oh, I already have it open down here. No, I don't. That's the Excel sheet. So assignments. Okay, so download the assignment. Again, once you download it, save it to your computer. Open it up. I'm doing this for a couple of reasons. Look at the bottom of this. You notice there's 2 tabs down here. Last week there was only 1. Okay. Initially, when I set this up, I had multiple tabs. Part of the Excel training was to force you guys to look down and see if there's multiple tabs. This is one of the assignments where I have not corrected that and put it all just on the one sheet. Okay. So when it opens up, it's probably going to open up on the problem slide. That's the big problem that you're going to do. Go to the exercise tab first. Okay. And then it's going to start off again, like last week. It's going to ask you, managerial accounting versus financial accounting. Okay. Would the following companies use a job order process, a job order or a process costing? So you go through here and, oh, wow, we already talked about yachts and we talked about plywood. So if you paid attention watching the video, you already know the answer to 2 of them. Okay. So you just got to kind of figure out the other 3 and how they would charge those out. Okay. Put these in order. And again, that comes right off the slides or right out of the book. Okay. Then you got an exercise here where we kind of do those charts. Okay. What I will tell you on this one is if you work this one out fully, the answer for number 3 ends up being up here in this chart. So you can either put the answer down here again if you want, or you can just say C number 2. Okay. So what would the total manufacturing overhead be? Again, you're going to read this story and your story problem in the book, and you're going to go through and what you have to determine is this going to be a manufacturing overhead or is it not? Now, David, I want you guys are going to take these alternate, okay? So Jacob, you're going to take the first one. David, you take the next one, and we're going to go through here and we're going to answer this. So everybody should get number 2-7 right on the homework this week, okay? Actually, so Jacob, you take wood. David, you take the nails and the glue. I'll do the depreciation on the saw. Okay. And then, Jacob, you take indirect labor. I'll do the depreciation on the truck because I want to talk to you about depreciation on those 2. And David, you take the assembly line wages. Okay. So what we're going to do is I need to enable editing. So we're just going to come out here beside this. Jacob, for Evergreen Manufacturing wood patio furniture, the company reports the following for June. So they're going to use $260,000 worth of wood. Is that going to be a direct cost or an indirect cost?
That's a direct cost.
Okay. So this is the way I do it. I just put a D there. Okay. So David, is the glues, nails, and stain going to be a direct cost or an indirect cost?
Direct.
Okay. It's going to be used directly in manufacturing it, but remember when we were talking earlier, glues and stains and nail is something we probably order in bulk. Okay, so it's going to be a little harder to track how much glue is used specifically on a given piece of furniture. So that would be an indirect cost. Okay, you just gotta kind of learn to think that way. Okay, now depreciation. Anytime you see depreciation, if it is used, it will always be an indirect cost. Okay. It will always be an indirect cost. So the other thing you have to ask yourself is it a cost that's part of the manufacturing, or is it not a cost in the manufacturing? So I'm going to answer the two depreciation ones. Depreciation on a saw. Well, since we're a company that manufactures wood furniture, that's used directly in part of the manufacturing process. Okay? But it is going to be an indirect cost because it's depreciation. So I'm going to put an I in here. Okay. Depreciation for on a delivery truck. Okay. If it were part of the manufacturing cost, it would be an indirect cost. But since it's the delivery truck, and we said last week, once the production is done and it moves to the finished goods inventory, we no longer worry about manufacturing costs, right? So this one, I'm just going to put an N in there because it's not going to be either. It'll be neither. Okay. So let's come back up here now. Jacob, is indirect manufacturing labor going to be a direct cost or an indirect cost?
It's an indirect cost.
Pretty easy to pick that one out, huh? Okay. And then David, assembly line workers, is that going to be a direct cost or an indirect cost?
Direct if it's the person making the table, indirect if it's an assembly line.
Yeah, so usually anytime you see assembly line, you think that's part of the direct manufacturing process. So that would be a D in there for a direct, right? So now to answer this question, what is the total manufacturing overhead? Well, all you have to do is come up here and find the ones that are indirect costs and add them together, right? Because if it's direct costs, it's not part of the manufacturing overhead, it's part of the direct costs. And if it's not direct cost or indirect cost, in this case the depreciation on the truck falls after the manufacturing process, it doesn't go into either category. So then you just have to add those three together. So if you see this kind of list in the future, and you will, that's the easiest way to do it. Just come out to the side, answer the question, is it direct cost, indirect cost? And then if they're asking you for manufacturer overhead, you just add your indirect costs together. So everybody should get 2-7 right this time. Okay. And this one just goes back to the calculation. What would the total cost of this job be? So you got to think about how we did the total job cost on that exercise 2-3 or 2-23 and continue on with that one. So when you get to the bottom of this one, don't stop. Okay, come down here and click problem, and you have to work this problem. This problem works out very similar to, not exactly the same, but very similar to how we worked 2-23. They give you a bunch of information. They give you some additional information down here. Okay, so up here in the problem, it tells you, what stuff they track directly and what stuff they. In this case, what you're going to do though is you're going to build you're going to have to add some lines, and you're going to build a little chart because you have two different companies. This is the total cost for the design company, but the total costs have to be broken down because some of it's going to go to Dining Court and some of it's going to go to Root Chocolates. Okay? So you have to be able to break this one down And like I said, if you need to add a line in here, you're just going to click. You're going to right click, click on the number, not the block here. Click on the number to the left, right click, come down and tell it to insert, and it'll add a row. And if you need to add 2 rows or 10 rows, you just do the same thing until you get enough rows. Okay? Do either of you have any questions?
Nope.
Do you want us to round up or round down or whatever if the final cost or if everything is like on a
No,
last problem?
give me what it calculates out to. Don't worry about
Okay.
rounding. Okay, that was just me as a manager. Me as a manager throwing stuff in there.
Yeah, I
Okay.
figured. I just wanted to make sure.
Now, what I do, it doesn't come into it doesn't come into play this week, okay? But you guys need to make sure. Well, I mean, you need to do this anyway. You guys need to make sure when you're reading, when you're doing your homework, you read the problem from the book. 2 things. One, I may have made a typo when I was typing it in on the computer. The other is sometimes there's a piece of detail that's not there or that's in the book that I didn't put on the Excel sheet. And I don't know whether it's next week or the week after, but one of these weeks coming up, there's going to be a specific exercise where it tells you when you're calculating a rate, and it tells you to carry it out to 5 points past the decimal. Okay, not this week, and I don't think it's next week. I think it's on chapter 5 or chapter 6. But there's a specific point in there where you need to carry it out 0 point and then carry it out 5 numbers. All right. So just make sure you read the specifics for each problem in the book as you're doing the homework. All right. If you guys don't have any questions, that's all I have for you tonight. Remember, if you do have questions, you guys all have my email address. You can email me. What I would tell you is email me first. If I haven't answered you back in about 48 hours, then send me a text message and say, hey, Professor Dave, check your email. Okay? Because sometimes I get busy with my job and I forget to check email because I get home at night and I'm tired and I don't go online and look at my email from Calvary. Okay? I try to make sure I check it every night, but I don't always. All right? Fellas, you guys have a good night. For those of you that are watching the video, I hope all this worked out for you. Again, there are a couple more of you that are supposed to be here. I know, just drew a blank on her name now.
Ashlyn.
No, Ashlyn had a game tonight, but there's a couple others that are signed up as in-class students, and you are supposed to be online with us if you are an in-class student, okay? I have an attendance and an activity report that I have to turn in, and part of what I have to turn in is whether the in-class students have been in class. So please make sure you're in class with me next week because that report's coming up. Don't know the exact date, but I have to let them know because if you're an in-class student and you're not coming to class, they may charge you more, move you to an online status, and put some more fees on you. And I don't want that to happen if you don't have to. Okay. Also, if you are an online student and you are available to join us on Tuesday evening, please come join us. The more that's here, the more feedback that I get from you guys as I'm teaching the class, the easier it is for me to teach and make sure that I'm getting the points across that I needed to get a point across. Okay? You guys have a good night, and we will see you next Thursday or next Tuesday.